Yes, we have our notebooks.
Okay. So just write the name of the chapter as cash flow statement. Once you finish writing, tell it is done. Okay.
Done.
Okay. Write down this question also.
Sir, are you presenting your screen?
Oh, sorry. I had not presented. 1 minute. Okay. Is it visible now?
Yes, sir.
Write this question. What is the question, Fiza? Please read it.
Explain about cash flow statement.
Okay. Now, see, first of all, try to understand why there is a need for preparing cash flow statement. Okay. Now, imagine a company has made a profit of 50 crore. Okay. Now, that does not mean that the company is having 50 crore rupees in the form of money or in the form of cash or bank balance, right? The cash and bank balance always differs. It can be either more than 50 crore or it can be even less than 50 crore. It will never be equal to 50 crore, right? So what happens then? The stakeholders, basically we will say the shareholders, they are interested in knowing the flow of money. That means in the entire year, from where the money has come and where the money has gone, right? So in order to give that report, we prepare a statement which is known as cash flow statement. Is it clear? Once again I am repeating. Suppose a company is making a net profit of 50 crore, right? Now that does not mean that that company is having a bank balance of 50 crore. The bank balance may be either more than 50 crore or it can be even less than 50 crore. So that's the reason the shareholders are interested in knowing the flow of money. Means they wanted to know from where the money has come and where the money has gone in the entire accounting year. So for that purpose we prepare this statement which is called as cash flow statement. Any doubt?
No.
Okay. Now just write this heading. Point number 1, please write the heading.
Done.
Okay. uh, Nasiha, read the point. What is written? Point number 1.
Birla Soft's financial performance.
Here we are taking the example of Birla Soft financial performance. Okay. Now no need to write. Just pay attention. I will read it further. Right. Now see what is mentioned in the financial year 2024. The revenue. That means the sale of this Birla Soft was 5 lakh. Sorry, 5278.1 crore. Okay. And their revenue growth is 10.1%. Their net profit is 623.8 crore and their net profit has grown by 88.1%. Okay. So what is the simple meaning? Birla Soft earned more revenue than the previous year but its profit increase much faster. You can see the revenue growth is only 10%, but the profit growth is 88.1%. Let us take an example. Suppose a company's sale increases by 10%, but its profit increases by 88%. Here you can see the company's revenue is increased by 10%, but the profit is increased by 88%. This means the company may have controlled its cost better and improved its profitability. This shows that they must have controlled their cost, and that's the reason their profitability has increased. Okay, now we will see the next part. Just write this point number 2, write it in your notebook, the question.
Done.
Okay, Fiza, read what is the question.
What is a cash flow statement?
Okay, so what is a cash flow statement, right? I will just explain it. See, a cash flow statement shows where cash came from and where cash was used during a particular period, right? Means it shows the flow of cash. Flow means what? From where the cash is coming and where the cash is going, right? It helps us understand the company's actual cash position, right? Now if we come to know from where the cash has come and where the cash has been used, so we come to know that what is the exact or what is the actual cash position. Like, let us take an example. Suppose Birla Soft reports profit as 100 crore, but the actual cash received is only 80 crore. So the cash flow statement helps explain why profit and actual cash are different. As I told you, right? See, the profit is 100 crore, but the actual cash is only 80 crore. So then there is a difference of 20 crore, right? So this cash flow statement helps us in telling why there is a difference, means why there is a difference in the actual profit and the actual cash are different. Okay. Yes, just write the third heading now.
Done.
Okay, what is the third heading?
Indirect method
Indirect
under
method
AS
under
AS3. AS is nothing but the accounting standard, right? Now see, there are two methods of showing the flow of cash. One is called as direct method. Direct method means what? In the direct method, only the transaction where the money is coming in and money is going out, they are recorded and shown. So that is called as a direct method. But that direct method is not there in your syllabus. In your syllabus, we are having indirect method. Indirect method means what? Indirect method means we start with the net profit. Means whatever net profit has come, that net profit is taken as the base, and depending on that net profit we find out the flow of cash. Okay. Now see, Birla Soft uses indirect method for calculating cash flow from operating activity. Now see, basically whatever money is coming in and going out, it is divided into three activities. The first activity is called as operating activity. Okay, the basic process is we start with the net profit. Okay, and then in the net profit there are some items which are not related with cash, so we add back that item, we add back that non-cash item, like say for example depreciation, right? uh, you tell me, we write depreciation in profit and loss account debit side, do we pay any money for that?
No.
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 Yes, tell me.
No.
No. So
No.
that means it is a non-cash item, right? So we add back that. Why we are adding back? Because we want to actually know the flow of cash, right? Then there are some gains or losses which are non-operating. Means what? Like say for example, there is a loss on sale of a machinery. So, loss on sale of machinery is a non-operating item. First of all, what is the meaning of operating item? The operating item means your regular business. Like suppose if you are manufacturing and selling jeans pant. So, whatever activities you are doing for selling the jeans pant and purchasing the raw material, paying the salary, all that are called operating, right? Besides that, whatever activity are there that are called as non-operating. So suppose if there is a loss by fire, so fire does fire occurs every time?
No.
No.
So it is a non-operating activity. We have to add back that loss. Okay.
Okay.
Then
So can you give example of non-operating gain?
non-operating gain means what, you know. Suppose you have kept some money in fixed deposit, so you will get interest from that.
Yes.
So it is an gain, but it is a non-operating gain because you had not earned that money by selling your jeans pant.
Okay, sir.
Okay, so that is also to be removed. Any doubt till here?
No.
No.
Then we have to adjust for changes in working capital. Like see, as I told you that uh, in cash flow statement we have to consider only the cash things, right? And working capital consists of current assets and current liabilities, and current assets and current liabilities are always because of credit transactions. Okay, so we have to adjust that changes in working capital. How to adjust the changes? When we solve the numericals, I will show you exactly how to adjust it. But here why we are adjusting it? Because basically working capital consists of current assets and current liabilities, and current assets and current liabilities are always because of credit transactions. They are not because of cash transactions. So we have to adjust that also. Okay, and finally after adjusting all these things we will get the cash which will be actually from the operating activity, means the cash which we have generated by actual business, that will be called as cash flow from operating activity. Any doubt so far?
No.
Okay,
No.
now the important point is the indirect method starts with the accounting profit and converts it into actual operating cash flow. Means what, you know, we start with the net profit, and in the net profit comprises of everything, cash items as well as non-cash items, cash items, credit items, everything, right? So in net profit we adjust all these things. So that's the reason we come to know the actual operating cash flow. So the indirect method starts with the accounting profit and it shows us the operating cash flow. Okay. Yes, now please write this point number 4 in your notebook. Nasiha, read what is there in point number 4.
Adjustment for depreciation and amortization.
Okay, so now as you are aware what is depreciation, right? So depreciation is an expense recorded for the reduction in the value of fixed assets due to use or passage of time. For example, a company buys a computer for 1 lakh. It records depreciation of 20,000. The 20,000 reduces the accounting profit, but no cash is paid. No 20,000 cash is paid during the year. Therefore, under the indirect method, net profit will be net profit plus depreciation is equal to adjusted profit, right? So why we do this? Because depreciation is a non-cash expense, right? We had not actually paid 20,000 cash. We had debited that just as an accounting entry because the value of computer must have been reduced, right? So this is the reason we add back the depreciation in the net profit in the indirect method. Any doubt as far as depreciation is concerned?
No,
No.
sir.
Okay, write down this point number 5.
Done.
Okay, Fiza, what is point number 5?
Amortization.
Amortization. Now what is amortization? Amortization is similar to depreciation, but then it relates with the intangible asset. Like say for example, suppose a company has purchased a software of rupees 5 lakh. If 1 lakh is charged as amortization, because if you are using the software, the value of software also gets reduced, right? And software is an intangible item, computer is a tangible item. So it is same like we are reducing, but instead of giving the name as depreciation, we are giving the name as amortization. So profit decreases by 1 lakh, but there is no fresh cash payment of 1 lakh in that year. We had not paid any money, right? So therefore amortization is added back while calculating operating cash flow under indirect method. Any doubt?
No.
Okay. Now give the heading point number 6. Yes, Fiza, read point number 6 heading.
Gain or loss on sale of assets.
Okay. Now suppose a machine has a book value of 2 lakh and it is sold for 2 lakh 50. That means there is a gain. What is the gain?
50,000.
50,000 is the gain,
50,000.
right? Now the 50,000 rupees actually increases the profit, right? But what, the
Yes.
2 lakh 50,000 cash is received from selling the machine. It is not an operating activity, it is an investing activity. Is that clear? And therefore the gain is also not an operating profit. We have to deduct that gain because we consider the operating activity as only our main business activity. Suppose if we would have earned this money by selling jeans pant, then we would have not done anything. But since this gain is due to the sale of an asset, so it is to be adjusted or it is to be deducted. Why? Because it is not from selling jeans, it is from selling the machine, and we don't sell machine on daily basis. That's why it is not an operating activity, it is an investing activity. Any doubt?
No, sir.
Similarly, if there is a loss on sale of asset, the loss is generally added back. Okay, so if there is any loss, then that loss is to be added back. Why? Because it is not through the operating activity. Okay, now write heading number 7.
So, investing activity is same as non-operating activity.
No, investing activity, because see there are three activities. One is operating, second is investing, and third is financing. So whatever activities are related with the assets except current assets are called as investing activity, and whatever activities are related with liabilities except current liabilities are called as financing activity. So basically cash flow is divided into three activities. Operating is the main business activity, investing is the activity which is related to the asset side except the current assets, and financing is related with the activity on the liabilities of the liability side except the current liability. Fine.
Okay, sir.
Okay, write this point number 7.
Done.
Yes, Nasiha, read what is the heading.
Dividends and taxes.
Dividends and taxes. Okay, so cash flow statement also consider actual cash payments such as income tax paid, right? So if actually you are paying an income tax, your money is going out. Even if you are paying dividend, then also the money is going out, right? See, these are important because they involve an actual movement of cash. Example, if the company pays tax 20 crore and dividend 30 crore, the payments reduce the company's cash balance. Therefore, stakeholder can understand how much cash is actually available after such payment. Okay? Any doubt?
No, sir.
Yes. Give the heading as point number 8. Yes, Fiza, read what is the heading.
Bank overdraft and current investments.
Okay. See, the cash flow statement also distinguishes between different types of financial items. Like the first is bank overdraft. Okay. Now, what is bank overdraft? Bank overdraft is a facility where a company can withdraw more money from its bank account. Then the available balance is subject to the bank's limit. Means it depends upon your limit. Okay. Then certain bank overdrafts that are repayable on demand may be treated as part of cash and cash equivalent under applicable accounting requirements. Okay. So bank overdraft, if they are telling that they are repayable on demand, then we will consider it as cash and cash equivalent, right? And if nothing is mentioned, we will consider bank overdraft as a financial activity. Any doubt?
No.
Okay. Then similarly, current investment. Now, what is the meaning of current investment? Now, current investments are investments that are held for short-term purposes. Example, a company invests rupees 10 crore temporarily in a short-term investment. This should not automatically be treated in the same way as a bank overdraft. The classification helps the user understand the company's true cash and liquidity position. Okay. So current investment will be treated as cash and cash equivalent. Current investment means you are investing in such securities where it is not more than 90 days. Then it is considered as current investment. So it is as equal as cash. So it is to be treated as cash and cash equivalent. Okay, right. Point number 9.
So, current investment is under financing activity.
No, current investment will come under the heading of cash and cash equivalent because your current investment is like cash only. We call it as cash equivalent. Why? Because you had invested in a very short term, means it will get converted into cash within 90 days. So that's why it is called as cash equivalent.
Okay.
Okay.
But why is bank overdraft considered as cash equivalent?
So bank overdraft is considered as cash equivalent only if it is mentioned that it is repayable on demand. If it is not mentioned that it is not repayable on demand or nothing is mentioned, then we don't consider bank overdraft as cash equivalent. We consider it as the financing activity.
It then it will be a liability, right?
Means it will come under liability. Yes.
Okay. Thank you.
Okay. Write this point number 9 is written. So last Fiza, read this point number 9.
Why is the cash flow statement important?
Okay. So the cash flow statement helps investors answer three important questions, right? Is the company generating cash from operation? A company may show high profit but generate weak operating cash. Second, can company meets its short-term obligation? Because cash is required to pay to the employees, cash is required to pay to the suppliers, cash is required to pay taxes, cash is required to pay interest, and it is also required to pay other expenses, right? So cash flow statement helps us in knowing that whether the company is generating enough cash. Then, can the company sustain future growth? If a company consistently generates strong cash from operation, it has greater ability to invest in new project, repay the borrowings, pay dividend, expand the business. Okay, so all these things are conceptually necessary to understand the cash flow statement. Any doubt in this?
No.
Shall I proceed further?
Yes.
Okay. Now, as I told you that it is to be prepared as per accounting standard 3. Okay. So, just write down the question first. 1 minute. I will just. As per AS3, I am writing here into bracket revised. Okay. Just write the question.
Done.
Okay. Nasiha, read the question.
Explain the cash flow activities as per AS3 revised.
Okay. So see, according to accounting standard 3, that is AS3 revised, cash flow statement is the changes in the cash and cash equivalent during the accounting period are classified into three major activities, right? As I told you. The first one is cash flow from operating activity. Okay. Now, what is the meaning of this? What do you mean by cash flow from operating activity? Means operating activities are the main revenue generating activities of a business. In simple words, cash generated or spent through the normal day to day business operation, right? Means whatever cash you are generating or spending out of your day to day business activities, they are called as operating activities. Example, cash received from customer, it is an operating activity, right? Cash paid to supplier is also an operating activity. Cash paid to employee is an operating activity. Cash paid for electricity rent is an operating activity. Cash paid for operating expenses, so all these are operating activities. Like we will take a practical example. ABC Limited sells goods for rupees 5 lakh and receives the money in cash. So rupees 5 lakh is the cash flow from operating activity. Any doubt? The operating activity is
No.
clear.
No, sir.
Shall I
Yes,
proceed further?
yes, yes.
The second activity is investing activity. Okay. Now, what do you mean by investing activity, right? See, investing activities relate to the purchase and sale of long-term asset and investment. So, as I told you that investing activity is related with the asset side. And in asset side, we consider only the long-term assets and the investment. We don't consider the current assets, right? So, in simple words, cash used for or received from buying and selling assets and investment. Example, purchase of machinery. So naturally, in purchase of machinery, what will happen? Money will come in or it will go out.
It will go out.
It will go out
So that's why it is called as cash outflow. Suppose if you are selling a machinery, then what will happen to money?
and it will come
It will
in the
come
fall.
in. So it is called cash inflow.
Inflow.
Similarly, if you are purchasing a land, see, all these are long term assets, right?
Cash outflow.
Cash outflow.
Yes.
Similarly, if you are selling a land,
Cash inflow.
cash
Cash
inflow.
inflow.
Okay. Similarly, purchase or sale of investment. Investment means what? You are purchasing share of some another company, or say you are keeping money in fixed deposit. Okay. Like say practical example, ABC Limited purchase machinery for rupees 2 lakh. So 2 lakh is cash flow from investing
Investing
activity.
activities.
Okay. If the company sells the old machine for 80,000, so this 80,000 is also what?
From investing
Cash
activities.
inflow.
Cash flow from investing activity. Any doubt?
No.
No.
Okay. The third activity, just write down the heading.
Done.
Yes. Nasiha, what is the third activity?
Cash flow from financing activities.
Cash flow from financing activity. So we will see the meaning. See, financing activities relates to change in capital and borrowings of the business. So basically it is talking about the liability side, right? And in liability also it talks about the capital and the loan, not the current liability. Okay. So in simple words, cash received or paid to owners and lenders. Owners means shareholders and lenders means bank or debentures, right? So whatever cash we are receiving to them or paying to them, it comes under financing activity, right? Example, issue of equity share. Issue means what? The company are selling the shares. Company is selling the shares to the shareholders or to the public. Then what will happen? Here you should think what is happening in the company. Like in partnership, we used to think what is happening to the firm. So here you should think what is happening in the company. So tell me, if the company is issuing equity shares, means it is selling equity shares, right? So what will happen to the money?
Cash inflow.
Cash inflow. Similarly, the company is selling preference shares.
Again, cash inflow.
Cash inflow.
Company is taking a bank loan.
Cash inflow.
Cash inflow. Company is repaying the bank loan.
Cash outflow.
Cash outflow. Company is paying dividend.
Cash outflow.
Cash outflow.
Company is redeeming the shares.
Cash outflow.
Redeeming
Cash
means what?
outflow.
They are taking back the shares
Taking
and
back.
giving the money, right?
Yes.
Okay. Practical example. Suppose ABC Limited is taking a bank loan of 10 lakh. So 10 lakh is what?
It is cash flow
Cash
from
flow from
financing
finance.
activities.
Okay. It repays 3 lakh.
Cash
Cash
outflow.
outflow from financing activities.
Cash outflow from financing activity. Okay. Now see, this is an easy way to remember what happens in the normal business, right? Customer, suppliers, employees. Okay, so these are operating activities. Now what happens with assets and investment, machinery, land and investment? These are which activity, tell me?
Investing activities.
Investing
Investing.
activity.
And what, how is the business finance? That is shares, loans and dividend. This is which activity?
Financing activities.
Financing
Financing activity.
activities.
Any doubt so far?
No.
No.
Shall we solve one small example?
Yes.
Okay, let me go to the question. We will solve example number 2. Where is example number 2? This is example 1. See, this is example number 2. Anand Limited arrived at a net income of rupees 5 lakh for the year ended 31st March 2017. Depreciation for the year was 2 lakh. There was a gain of rupees 50,000 on assets sold, which was credited to profit and loss account. Bills receivable increased during the year 40,000 and bills payable also increased by 60,000. Compute the cash flow from operating activities by indirect approach. Okay. So we will find out the cash flow from operating activity by indirect approach. Okay. So let us solve example number 2. Okay. So just prepare these columns. Cash flow statement as per AS3 revised, particulars, amount rupees. Only half page will be required, not more than that.
Done.
Okay. So now here we have to write the heading as cash flow from operating activities. A part. Cash flow from operating activities. Okay.
Done.
Yes.
Done.
Now let us go to the question and see how what they are telling, that the net income, that is the net profit, is 5 lakh rupees, right? So I will write that over here. Net profit is 5 lakh. So write it in the outer column. The net profit is 5 lakh. Okay. Now in this we have to adjust the non-cash and non-operating item. Okay. Why? Because there in while coming to this profit, there might be some items where the cash must not have been involved, so that are called as non-cash. And there might be some item which must have been related actually to investing or financing, so it is called as a non-operating item. So we have to adjust that also. Okay. So just give this heading, adjust non-cash and non-operating item.
So non-operating item will include items in financing activities and investment activities.
Yeah, means it anything which is not related with the operating, and it has come while calculating this profit, we have to adjust that. While reading the question, you will come to understand. You will come to know.
Okay.
Have you written the heading?
Yes.
Yes.
Okay. Now let us move to the question. Now see what they are telling. Depreciation for the year was 2 lakh. Now tell me, does depreciation involves cash?
No.
So
No.
since the money is
Not
not
cash
involved,
expense.
we will add back this, right? So just write here,
Yes.
add depreciation. Any doubt?
Done. No.
Now similarly, what they are telling, there was a gain of rupees 50,000 on assets sold, right? Now see, actually there is a gain of 50,000, but is that 50,000 gained by selling the jeans pant?
No.
So then how it is
No.
gained? It is gained by selling an asset, right?
Yes.
So that means it is a non-operating item. We have to remove this gain. So we have to write here less gain from sale of assets. Why we are reducing? Because this gain is not from operating activity. Is it clear?
Yes.
It is in this investment activity, right?
Yeah, it is a investing activity, but here they are not telling us to show the investing activity. In the first example, they are telling us only to find out the cash which is generated from operating activity.
Okay.
Okay. Any doubt why we
Done.
had deducted this? It is clear now, because this gain
Yes.
is not from the operating activity. Okay.
Yes.
Done.
Now we will take this to outer column, 2 lakh minus 50,000, that is 1 lakh 50,000, and add this to, we will get 6 lakh 50. This is called operating profit before changes in working capital. Any doubt?
So can you explain the same?
Yes.
Can you explain this operating profit before changes in working
It is
capital?
just the heading. This amount is called as operating profit before changes in working capital, because we had not adjusted the current assets and current liability yet. So that's why it is called as operating profit before changes in working capital. Now in the next heading, we will adjust the current assets and current liability also. So that is called adjust changes in working capital. Okay.
Sir, can you tell me what is working capital?
Working capital is current assets minus current liability.
Okay.
Okay. Or in
Okay.
short, you can tell that the capital which is required to keep your factory or your business in working condition. Because see,
Okay.
suppose if you are having 10 crore, and out of that 10 crore, if you are purchasing machinery of 5 crore and purchasing building of 5 crore, so your 10 crore is gone.
Yes.
Okay, now you tell me, is the factory in the working condition?
No.
So you will need some more money, right?
Yes.
So that capital is called working capital.
Okay, sir.
Okay,
Thanks.
and basically it is calculated as current assets minus current liability. Okay.
Okay. Okay.
Chale, shall I proceed?
Yes.
Okay. Now in this,
Yes.
what we have to do, we have to consider the current assets and the current liability, right? So see, they are telling that bills receivable increased during the year 40,000. Okay. Now see, the current assets has inverse relation with cash. Means what? If the current asset is increasing, that means cash will be in minus. Okay. And the current liability has direct relationship, right? But rather than remembering this inverse and direct relationship, we will understand it logically, right? See, logically what happens, bills receivable is increased during the year 40,000. What does this mean? See, you know what is the meaning of bills receivable, right?
Yes.
Yes.
What is bills receivable? Tell me.
We should get money.
Huh. You are supposed to receive the money, right? So can I
Yes.
say the bills receivable is increased means what? You have sold your jeans pant on credit and not received the money.
Yes.
Yes.
right? So not received means minus, right?
Okay.
So I will
Okay.
say here increase in bill receivable. What is the meaning of increase in bill receivable? Means what? You have sold the goods on credit. Am I right?
Yes.
And sold the
Yes.
goods in credit means you have not received the money, right?
Yes.
So not received the money means minus. Okay. Any doubt in this?
No.
Okay. Now let us talk about bills payable. What they are telling, see bills payable also increase by 60,000 means what? What is the meaning of bills payable?
We should pay the
We
company.
need to pay the money.
Means we had purchased on credit and we had not paid the money, right?
Yes.
So can I say not paying the money means saving the money?
Yes.
So saving means I can say it is positive.
Yes.
Okay. So I will write here increase in bills payable as positive. Any doubt? The final
No.
result will come here. Okay. And at this will be called as net cash flow from operating activity. Basically we are supposed to subtract tax also, then we get the net cash flow, but since tax is not given in this question, this 6,70,000 will actually be your cash flow from operating activity. You got it?
Yes.
Right? So similarly we are supposed to prepare the investing activity as well as financing activity also, right? Today practically we had seen only how to prepare, how to find out the cash flow from operating activity. Okay.
So the final answer which we got, is it cash inflow or outflow?
It is inflow since it is positive.
Okay.
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 Yes. So shall I